Peter McGuire, CEO of Exxon Australia. Welcome, Peter. Let's talk to you a bit about the metals and a big sort of turnaround last week. Recessionary fears, suddenly everyone waking up to those supposedly, and supposedly that's the reason why we saw a bit of a hammering for things like copper. Again, same question to you on that. Why did we see what happened, and where do you see that carrying through for the second half of the year?
Well, good morning, Dyala, and greetings from Sydney to my fellow panelists. Yeah, I looked this morning, and really the one, I think, commodity that stands out as far as a washout would have to be the tin market. It's fallen 50% in the last couple of months. So here we are at the end of June, and I think in March it was nearly at 48,000. Now it's at 24,000. So it had a crash out Friday, spanked down 9%. But yes, copper's weaker at 8,300 a metric ton. You've got a number of those other base metals, aluminium and zinc, really hit hard. Big push downs. And the recessionary fears, as you mentioned, that's the whole storyline. And weaker demand, the Chinese story, who's going to be buying goods, and that's the fear factor coming into the market, stagflation, inflation, and the next 6 months, I think, could be very wild and woolly. I've listened to what Dr. Rad mentioned, and certainly my dear friend Omar, and there's a lot of conjecture out there. There's a lot of fear on Main Street, and Wall Street's not sure how it's going to manage with, that forum coming up on Wednesday, the big three. We've got Powell, Lagarde, and Bailey. Maybe they're going to be the three musketeers.
But I mean, it seems that this fear of recession, at least when you look and read the news the last week, it's as volatile as prices, really, in the sense that now we're already hearing, at least the media, saying, "Oh, that fear is dissipating a little bit. We've kind of gone through our recessionary fear, and the only way really is up from now, especially as we go through towards the end of the year." You mentioned China, Peter. How dependent are we on that China resumes its exports and imports, and to get the sort of metals commodities story back on track?
Well, it needs buyers on the other side, Dyala. So it needs someone somewhere to buy something from China after those finished goods are manufactured, supply chains, what's happening as far as the linkages with shipping and how quickly they can turn these goods around. But it needs a strong consumer to say, hey, I'm getting a wage rise. I've gone from $28 an hour to $40 an hour to match inflation. So that's the cost as far as when you're seeing, these headlines, pork prices, beef, eggs, you name it, across pretty much the world, costs are going up tremendously. So if you haven't got wages coming up, who's going to buy those finished goods coming out of China? There's the first part. And I made a point of that Financial Times article. We've got the Goldman Sachs doubled the risk of US entering, and it was on the weekend's edition, the US entering a recession from 15 to 30% over the next couple of months, and they're saying it could be 50% chance of a recession over the next 18 months to 2 years. So that's sentiment. Sentiment is what really fuels a trader, and I think there's a lot of fear out there.
Yeah, but what you do hear is people sort of absorbing that already, and everyone is saying it's going to be a recession. Markets are going to take more of a correction, but nothing near what we've seen. And talk a bit more about that, Peter, the impact on the currency situation, on the US dollar, in terms of that polarization that's deepening as we see it, and the East, the rest getting stronger, supposedly, because they have all the commodities, etc. So the impact of that, this new world order, if you like, on equities, and commodities, and again, second half risks from your point of view. I know there's so many uncertainties, but what direction would you see that going, or the year ending, let's say? That's
well, the first half, the other has been on fire. It's been electric. So every trader's rubbing their hands with glee. All you had to do was short the yen, have a look at what happens as far as pound and certainly the euro. So there's three to work off. The king dollar has been dramatic. Are we going to see that continual uplift? I think there'll be maybe a 106, 107 handle. You're currently at 104 for the US dollar index. Let's see what Mr. Powell's prepared to do in the next, well, he's only probably 2.5 to 3 weeks away from giving us a headline, what's happening in July. So are we going to see another 75 basis points, or does he go all out and throws it up 1%? Who knows? So we're sitting here, I think from a currency trading perspective, the line in the sand for the yen's got to be possibly a 145. We've got numbers coming out from the Tankan this Friday. I'm curious to see debt to GDP numbers. We understand Japan's running at 300%, approximately, US at about 130%. Just for the record, Russia's at 14%, so it's not in a bad position. And that US dollar index, I think, will probably come under some firepower and sell off maybe in the next 8 to 15 weeks. And we've got the midterms coming in at the end of October, start of November. So it's going to be nothing short of dramatic over the next 3 months what happens as far as US. And if it works on my dear Omar's suggestions, then it's going to be game on.
Peter, let's have a look at the week ahead. We've got a few minutes left. Any stats to look out for? Any further sort of impact on the market from last week? Everything was looking green on my screen this morning when I put on Bloomberg. Do you see that sort of revamped sort of recovery euphoria in the equities markets? What's week ahead? Anything to look out for?
Well, Dyala, it's been a fairly strong day if you're looking at numbers across Asia Pacific today, building on New York close on Friday. So from a sentiment point of view, Australia's up nearly 2%, and a number of those other markets have been bid up strongly. So the majority is a sea of green and big green. So that's a good point starting in. Where we move from here, maybe that momentum may continue over the next couple of days. We've got big numbers, as I mentioned earlier, the forum with the three of them talking on Wednesday. You've got the situation numbers coming out of China. We've got GDP numbers, I think, coming out of Canada Wednesday, USA numbers. So the overall, there's an avalanche of data. We've just got to see how it falls, and that'll give us a pretty good headline as far as sentiment from Main Street, inflation, recessionary fears, and everything else thrown to the pack of wolves. And I feel as though that was strongly bid up for US crude, and Brent on Friday evening came off a couple of bucks today in Asia trades early. So maybe there's a little bit of profit taking there, but I wouldn't be surprised to see that back up and whipsawing like it has, goes down to about 103 and back up to 120 or 105 to 120. So yeah, hold on to your hat. It's going to be a rough ride.
Thank you, Rad Al-Khadiri, Amar Najia, Peter McGuire. Thank you so much, everyone, for joining us this morning. Have a great week ahead.
Thank you very much, Dyala.
Thank you, guys.